Thank you everyone for joining us. We know that we are the guys before your final drinks. I heard SFF has organized a bunch of drinks, different parts. So we're the guys who will usher you to the drinks after this. But Rob, as we look at this, there's a funny thing about this panel. So across Southeast Asia, if you look at the two largest insurtechs are on the stage together, combined worth $5-6 billion. Combined, both this insurtech and this insurtech have raised more money than all the other insurtechs combined. So this is like the best thing you can expect from an insurtech world. And as Rob, you look at from that perspective, so the slight behavior difference between your flavor and our flavor is we're the manufacturers, and we work and collaborate with you for several accounts for even 5 years. You excel on the distribution for the digital-enabled distribution. We do manufacturing, digital, and offline. And how do you see all of that coming together from your lens, and what does it feel like building that distribution business from Singapore for the world?
Well, first of all, it is a real pleasure to get a chance to be with all of you today, and Varun with you, because as you just said, your organization is a big partner of our organization. And sometimes that surprises people when you think about two insurtechs working together, but in reality, it's actually our normal way of doing business. So if I recap a couple things that Varun said, number one, we've raised a lot of capital. Bolttech itself has raised the largest Series A in the history of the world for an insurtech, followed by the largest Series B in the history of the world for an insurtech. And what's maybe most interesting isn't how much we've raised, but who we've raised it with. And something that Varun and I have in common is, for example, here in Singapore, the Economic Development Board investment that we have. So EDBI, thank you, a great partner. But so therefore, it's not just about how much capital, it's who you're partners with and what they can do. So it's great that we can be partners from a business perspective. It's also great when our investors are our partners in helping us to succeed. So at bolttech, EDBI is an investor, Leapfrog, the largest impact investor in the world, is our investor. Khazanah out of Malaysia. These are really important examples of who the investors are, because they can help us succeed as part of an ecosystem partnership. They can help us to identify opportunities for commercial relationships. And then we have to, I think the way we've been so successful, is we have to have a mindset of cooperation, maybe co-opetition, and this concept of big ecosystem open-mindedness. And I think that's what is so neat about us together. Together here in Singapore, for you, for example, 1 out of every 5 households in this country has a helper. And together, we are providing protection solutions for those helpers. bolttech's distribution and the wonderful power of Singlife and the balance sheet, the risk-taking capability that you have. So to me, it's a mindset. It's about collaboration, co-opetition if necessary, and really in the end, just a mindset of helping one another do the right thing for the customer.
Absolutely. It goes back to our belief in open architecture, which is something which you also emphasize a lot on, because we believe that the customer should have choices, the channels should have choices, and which is where like they would want diversity from that perspective. And that's something which we have always looked at. So one thing which I've been always looking at the whole embedded finance play from that perspective is a majority of the products have been GI based, which are annually renewable flavors from that perspective. And we do a fair bit of that. But the fact remains that globally, if you look at in the retail side, commercial separate, in the retail side, a larger value pools are on the life and health. But not as much dollar or those kind of things have achieved in your kind of world. How do you look at that? GI will happen what happen, but what about life and health? Where do you see you play in the life and health space?
We think of this as sort of a journey. The nature of the beast is that the first transaction that someone might do with us might be perhaps protecting your cell phone. That's the first transaction, but that's not our end destination. It's sort of one of the steps along the journey. And you might be able to, for example, protect your cell phone, and your next question might be, maybe I want to protect all of my home electronics because they have a similar characteristics. And oh, by the way, if I turn my roaming on my cell phone, I know that I'm traveling, so maybe I can protect the travel. Or oh, by the way I'm likely to get hacked is through one of these electronic devices, so perhaps it's a personal cyber protection. All of these things are actually part of a journey. The truth of the matter is, neither you nor we know the exact path that journey will take. And so what we're trying to do is create a set of capabilities that create the flexibility for a customer to be able to jump through the journey the way that they want to. I do agree that it might be wonderful to be able to provide a life product or maybe a more complex health product through our capabilities, but we can't force that. It has to be, how can we make sure that we have a tailored, affordable, accessible, and a convenient product at the exact point that the customer wants it. And in every country here in Southeast Asia, or even we operate in Europe and we operate in North America, it depends on where the customer wants that, not where we want to push it. And so our goal is to make sure that we can create those capabilities, but our humility has to be in recognizing that the customer journey will be different everywhere. And it doesn't matter if we want to sell something that is more valuable for us. The question is, what's most valuable in the eyes of the customer?
So another thing is, since you operate in different parts of the world, we've also seen different parts of the world because of the broader group we are part of. We've seen the characteristics in some of the emerging markets are very different in terms of the focus on more urgent protection items than more broader terms. When you look at distribution through embedded partnerships, are there specific differences you see between the Western Hemisphere and the Eastern Hemisphere, or the global North versus global South in terms of the customer attitudes, because you serve a lot of diverse, disparate customers?
In a big way, the geography or the nature of the cultures and the customs of an individual country matter completely. In the end, you can probably tell from this accent, I wasn't born in Singapore, although this is my home. So I'm proudly a PR living here in Singapore since 2018. But the truth of the matter is I live here because it's so difficult to assess how to make things work in Southeast Asia from North America, or in Europe from Southeast Asia. And so it's super important for us to have a team that actually is stationed in all of these places where we're trying to solve, because the truth of the matter is, as you were just indicating, the answer in Europe is different than the answer in Asia. But don't mistake yourself to think that the answer in Asia is the same in every country in Asia. Singapore is hugely different from many of the other countries here, even in Southeast Asia. And so therefore, living here, breathing it, living it, thinking about it every day, interacting with partners like you in this space is the real path for us to be able to understand. But if you say, hey, are the needs and are the priorities different? They're night and day different. The challenge for us is to look at it from the customer's lens into us, not from our lens out to the customer.
Very interesting. And if I were to bring like one very Southeast Asian flavor, what has happened is a lot of distribution platforms, at least in the region, have started to buy manufacturing licenses. We saw that happen in the Europe, and some of those companies who started this and then stepped back from doing that from their home markets itself. Some of them tried to do in the US, and at least on the current P&L, there are questionable views whether what works. So when there is this conundrum between distribution-led players, see, manufacturers will always do distribution. themselves and through partners. But when distributor-led players, in some markets you're doing manufacturing today, and not all people may not know, right? Specifically for some of the Western markets, you do manufacturing. So what's your decision framework process in terms of which markets and which products would you have, let's say, private label, and which ones which will be pure distribution? Because as a manufacturer, sometimes it's nervousness that I'm partnering with this, they will learn about it enough and they will launch their private label, take the top end of the customer pool, and I'll be left with the bottom 40 from that. So how does that work, and how do you explain that to your manufacturers because when you're doing manufacturing, you still do distribution. So how do you manage that conflict in a sense?
I love this question. The very first thing I'll say to all of you, and I'll say to you as my partner, is don't fear bolttech. We are here to enable you. We're here to be a partner of you. We are not here to be your great competitor and your great disruptor. It's very much a mindset. I'll start by saying this to you. We are an Insurtech that seeks to be a balance sheet light Insurtech. I came, before doing my role at bolttech, I came from AIG. I spent a 12-year tour of duty with a balance sheet. I do not want to pretend that that is anywhere on the path for the aspiration of bolttech. It is not. What I really want us to do is be a distribution-focused enabler who can work with the balance sheet players. The truth of the matter is that in reality, we are not all born with lots of friends. So as a baby, bolttech, we're only 4.5 years old. At the very beginning, we had no friends. None of you liked us. Today, I hope you like us.
We have it for 4.5 years. We were the first ones in Singapore, so.
We love you. When you start without having a lot of friends, sometimes you have to do some things yourself. And so we've had some balance sheet capability because we needed to, out of necessity. And over time, as we have welcomed investors into the bolttech fold, we have been willing to sell off balance sheet risk-taking businesses so that we can continue to narrow our focus more and more toward the distribution business and less from the risk-taking business. Because there are great risk-takers in the audience and you who are just better underwriters than we want to be or that we today have any aspiration to be. In general, what I say is sometimes we're a risk taker when we have to be because no one yet has gotten their mind around the new idea that we're bringing to the market. And so sometimes we have to show you. And we're willing to show you how we want to do this. And when we're done showing, we're happy to hand the reins over and let you take the risk, and we'll handle the distribution and keep moving on. But it is our aspiration to be balance sheet light. With that said, we operate with two models within bolttech. We operate with a model that says on some of the very simple and very high volume, low complexity products, we can do everything end to end, although we'll work with a partner who wants to take some of that risk themselves, but we're happy to do all that end to end. But everything else, we really like to bring the customer choice. And when we're bringing choice, we should choose from the balance sheet experts who are most capable. And in many cases, for example, it's specifically you. So we don't want to be one of the choices when we're offering choice. When we offer choice, it should be you or someone else. When it's a simple product where it's the intro product into the marketplace, we're happy to do that ourselves to get the very first distribution relationship that people can rely on. I hope that makes sense.
Absolutely fantastic. It makes absolute sense. Now this is a more complex one. Based on your experience, 2 or 3 things which Insurtechs, the other Insurtechs which haven't worked out, they are doing wrong. So what are the 3 lessons you can give for the next generation? Do not do these 3 things if you want to grow.
Yeah. The very first thing I'd say is at bolttech, We follow the exact same mission, vision, and values that we started with on day one. We pivot day to day, week to week, month to month, year to year, on a narrow basis, just like anyone would, because you have to actually manage based off of the economic conditions of the day, based off of the conditions or the opportunities that the market's presenting at any given time. But basically, stay true to your initial vision. So you made reference earlier to there are some in different geographies who have shifted between, do I want to be balance sheet heavy or balance sheet light? That is not a recipe for success. If you are an Insurtech that has got a strategic vision that says we're going to be a balance sheet light business, I have really good advice for you. Let the experts take the balance sheet risk, and you stick to your knitting, which is what we've done. And so we know we could grow faster, maybe be more attractive in terms of the volume of revenue that we have if we were willing to write risk where we were taking it on our own balance sheet. But that's your expertise. That's not mine. Again, we'll do it where it's necessary, but we don't do it as a matter of course for our business, and we've stayed simply true to that. So to me, I'd say figure out your mission, vision, and values and stick to that and adjust course as you need to. The second thing is, have a view that recognizes that you can't do all of this stuff by yourself. We are ecosystem players. It should seem somewhat unusual to you in the audience that two insurtechs in the same country who've raised a lot of capital together, not as a team, but together meaning each of our companies, and yet we're really big partners. And so our view is we want to cooperate with one another. When I was going through school in the US, we used to have a phrase, you've got to cooperate to graduate. If we want to graduate to the next level of success, we're going to cooperate with a player like you. People who declare war on everyone else. I'm going to beat all of you. That is a recipe for not succeeding. A recipe for succeeding, I would like to be all of your partners. Please work with us, give us a chance to work with you, understand what you're good at, we'll work with that, understand what we're good at, and share that capability with you. That's a much better recipe. That's the difference, I think, between a successful company and the ones that have struggled.
Very, very unique insight from that perspective. The other part which is very unique for Southeast Asia, I always say, is art of exit. The exit for Southeast Asian companies is very different from some other markets. The limitations a bit in terms of public markets. So a lot of them are trade sales. There are a lot of insurtechs. I meet a lot of young insurtechs. If you were to give them some guidance on what would Rob look at when he looks at acquiring companies, because he has acquired a bunch. If I'm not mistaken, at least three, four, one I know. You can tell how many you have acquired. And what does it take for you to acquire? What do you look? Because I know at least 5 who are saying, what does Rob see so that we can be that?
So the very first thing I'd say is, yes, we've done acquisitions. We do acquisitions partly because I don't want to die of old age building it ourselves. I do want to die of old age, by the way. Just not waiting to build all of this ourselves.
So if too long, we have covered your life.
Excellent. So together you can see another place in which we're partnering. If I die of old age, he can help me. But I really believe that we think of this as a path to accelerating what it is that we want to accomplish. Because of that, we spend our time focusing on the problem that we're trying to solve more than the solution people are trying to bring. So for example, if you are an AI company and you say, I'm here with a solution, buy me or use my solution, it's nowhere near as interesting to me as if you say, I understand the problems that you're trying to help the world to solve, and we think that we can be part of helping you to accelerate the path to solving that problem. If we can find partners like that, we're really open-minded because we're not going to do all of that by ourselves. But generally speaking, it's not a great path to say, I've got the solution, I hope you have a problem that it fits.
But would you prioritize more technology companies or distribution companies? Because other challenge for Insurtech companies are like young founders who want to build stuff is, do I build a pure tech play or do I build a distribution? They are very different DNAs. They're very different. What are the pros, cons when to help these young people decide what to build?
It's a great question. There's no single answer because we actually like both. So sometimes there is an element of the technology that we would have to build ourselves, but someone might have a better solution for, again, and a faster path for us to create that capability. We love that. We would also tell you that distribution is king. So if you say to me, what do you want in life? You know what I want? I want more of some things. I want more partners, which means more distribution partners. I want more buyers of embedded insurance. I want more capital for any of you out there who are capital providers. We'll talk to you too. We want more and more and more, but we also want more solutions to the challenges that we're facing with trying to figure out how to better serve a customer. And so it's not one or the other. It could be technology, it could be distribution. The truth of the matter is, it's going to be really rare if someone comes to us with great distribution partners but no technology. So in all likelihood, you had a great technology capability or idea, and somehow you were able to find a connection with a distribution partner that's super interesting to us. So that's the way we think about it. But we're not trying to boil the ocean and be everything to everyone. There are simply a handful of vertical industry groups that interest us. We love the telco industry, the telecommunications industry, and the manufacturers. We love you. We love the automobile, the mobility industry, and the manufacturers. We love you. We love the retail industry, especially the e-commerce players. And we love the real estate industry because one of the products that we frequently are selling is renters insurance, homeowners insurance, et cetera. So these are the industries we're interested in. We're not trying to do everything. We're trying to fundamentally do those areas.
And when we look at that perspective, would it be fun if you can walk through one acquisition? Pick any of those and tell them that, okay, we did this company for this reason, and this was what we liked in that asset. Pick from something from the past so that it's not so sensitive one.
That's okay. I'll take the last acquisition we did. We finished raising the largest Series B fundraising round in the history of the world for an Insurtech in 2023. And also in 2023, we bought a business out of Poland in Europe called Digital Care. We are thrilled with that acquisition. That company focuses on the protection of handset devices, the cell phone. And they have a really great team with really good technological capabilities, some of which we've thought of, but we hadn't been able to build yet ourselves. But they also came with some amazing distribution relationships. So we got all of those things. We didn't just get tech, but we got some tech that we don't have ourselves today and that we didn't want to build. And we got some amazing distribution relationships that will help us to grow faster, better, and complement what we're already trying to do. That's a great example, and we were not afraid to put real capital at risk to do a very nice sized, chunky acquisition, having just raised capital.
That's fantastic. I'll just summarize it for everyone. So what we've discussed and learned is the real power is for manufacturers and distributors to collaborate and create real value for people. And that's one key part. For the young founders who are building assets, whose view is that I'll build something for a trade sale, focus on being rock star at what you're doing. If you're building pure tech, be rock star on that. If you're building distribution, use tech, relationships, whatever, but just be in class. You need to get your straight A's to be able to that, because there's enough options for acquirers. We acquired companies. We were acquired. He has acquired companies. There is a lot of traffic and competition. Get your straight A's, whether it's technology, distribution, culture, and mission, and then hopefully you would be on the stage next. Thank you so much. Thank you, everyone. Thanks, Rob.
Thank you.